All right, welcome back, everybody, to the Pave the Way podcast. I'm your host, Greg Helbeck, and today I am with Kevin Bupp, who is a successful commercial real estate investor. And Kevin's a guy I've been listening to for a while, and we got connected a couple weeks ago. And I asked him if he'd be a guest on the show. So really cool to have someone I've been a big follower for a while now on my own show. So Kevin, welcome to the show, and I'm really happy to have you.
Greg, thanks for having me, man. I'm looking forward to it.
Awesome, man. Your podcast I've been listening to for a while. I remember some specific episodes. That one with Jim Randall, I'm not kidding. I've listened to that thing once a week for many weeks in a row. I've been studying that stuff. So
yeah,
really,
that's a good one.
really excited to have you on here, Kevin. So let's just kick it right off here. So, if you guys aren't familiar with Kevin, he is a very successful commercial real estate investor. He began his journey in the single family space. And then after, what would you say, Kevin, about 10 years or so, you decided to transition more into the commercial mobile home park side of the things?
Well, it was probably about 5 or 6 years in, we started buying multifamily, but it was never a focus. It was just by accident we started buying multifamily. I don't know how else to say it other than that, but I was a single family guy. We had a machine put together just like you, Greg, and ultimately realized that that was a much better way to scale. And I didn't get into mobile home parks until like 7 years ago. So I'm like 19 years into my investing journey. I know, man, I'm aging myself here, but yeah. But and today all we do is focus on, at least at this point in time, our mobile home parks. That is our core business. But I've owned retail, I've owned office, I've owned tracts of raw land. We had a self-storage development, hundreds of single-family properties, hundreds of multifamily doors. But again, today our core focus are mobile home parks across the country.
Absolutely. That's awesome. We'll get much more into detail on that as the show goes on. So we gave a little bit of your background. So let's kind of rewind the clocks a little bit more. So Kevin, what initially got you started? Why did you even get into this real estate investing business? It's always cool to hear everyone's kind of stories. What gave you the bug?
Yeah. I wish I could actually credit myself for like getting the bug and actually diving in, but I happened to meet a gentleman. It's kind of a funny story, but he was dating my girlfriend's mother at the time. This guy is like, his name's David. He was about 25 years older than I was, and he was always around around her mom's house. And this is back when I was like going to community college. He kind of show up and drove a really nice car. He dressed really nice. Like, this is a really cool guy, and I began them, and he was a local real estate investor. And and I'm pretty sure in me he saw a kid that was going to school with no direction whatsoever. I really didn't. I was tending bar in the evenings, going to school, just trying to figure out what I wanted to do in life. And he invited me to a 3-day boot camp down in Philadelphia, and his partner couldn't go, and so he's like, "Hey, I already paid for this ticket. It was like a $3,000 ticket." I'm like, "Well, I don't even know what I'm about to learn here. I have no idea what it is you do, but it seems pretty cool. You live a cool lifestyle. You know, you obviously have income from your investment properties," which was just beyond my comprehension at that time. And so I was like, what do I have to lose by going to this event, right? Surround myself with this guy and a bunch of his friends that are incredibly successful. And so that's what I did. I went to this boot camp. It was a, learn how to fix and flip home boot camp. And it was put on by Ron LeGrand, which Ron LeGrand's, I think he's still around. He's like old school. Yeah. He's really old school.
Yeah. Oh yeah. He's I'm a young dude, and I remember, like, I still know that guy. I've heard of him. So
yeah. So I went there, and I left that meeting. I was overwhelmed. I was excited. I mean, I had all these emotions going through my body. I met a lot of people that I didn't feel were much smarter than I, but they had this knowledge of how to make money in real estate by investing in real estate. And again, that boot camp was about fixing and flipping single family homes. And so I left that boot camp excited, but again, just not knowing what the next steps are. Like, I had $1,000 in my pocket, and I was like, I knew I wanted to do this. And I went to David. I was like, "David, how can I help you in your business, man? I want to be around you. Like, I want to not just hang out and when I'm over at my girlfriend's house and you're there hanging out with her mom, like not just that way, but I want to be like, I want to learn what it is you do on a daily basis. I want to see your business. I want to see the inner workings, but how can I add value to you so that I can learn what it is you do?" And he accepted the offer. And so I literally, in between classes and tending bar in the evenings, I would be at either David's office, out, in the field, meeting with contractors, meeting with real estate agents, helping them with paperwork. I was his admin. I was his do whatever you need. And so I was an extension of him and his business. And I did that for like 14 months. And I did it long enough to where I felt comfortable to do my first deal. And I bought a really rundown, home in Harrisburg, Pennsylvania, where I grew up. And
I know
that was the start of it, man. I mean, that was it. And then, I got the bug. So the bug came, by means of that boot camp. Yeah. But really, it was that 14 months following that boot camp where literally I was underneath the wing of David, and David was showing me the ropes. He was teaching me everything. And in turn, I was helping him grow his business, right? I was there. I was an extension of him. I was putting in at least 35 hours a week, and just helping him grow and expand, and reach that next level in his own business. And in turn, I won in a big way from it. So
absolutely. That's great. That's awesome. It's funny. And how old were you when you got started? Because I think we have a lot of connection.
I was 19 when I met him, and I was, 20 and a half when I bought my first property.
Wow. You got started. So I'm 23 now. I actually got started when I was like in my early 20s. So I think we both got started at the same age. You're a little bit older than me, but that your background is almost identical to the way I got started. So it's
really
funny.
Good deal.
It's almost identical. Besides, I was in community college. I went through a 3-day boot camp. It's almost like scary how similar stories are. I'm like,
that's why you were giggling as I was telling the story.
Yeah, I'm like sitting here. I'm like, was he like at the boot camp behind me a couple of years ago? Like, did I not see him in the back? So very similar. Well, I guess we could talk about that offline or something. But anyway, so you went in here, and I want the listeners to hit on. I want to hit on something real quick before we transition. Kevin just didn't, go to bed and wish for a mentor overnight. He found a mentor who happened to be his girlfriend's boyfriend or girlfriend's mother's boyfriend.
That's right? It. Yeah, I know. It's a long one. Tongue twister.
Yeah. And then, so instead of Kevin just saying, hey, how do I get immediately in your world? He said, how do I provide value to you? How do I help you with your business? How do I give before I get? So a lot of people, they reach out to me, they reach out to people that I know, and they just want a mentor overnight. And they're certainly out there, right? But you got to always have that approach where, how do I provide value first? Why would this person want to give their time to me? How can I help them? And Kevin did that for almost 2 years. And he learned in the trenches, he checked his ego at the door, and he provided upfront value for this mentor. And in exchange, he learned probably more in 14 months than most people will learn from reading all the books in the world. Would you say, Kevin?
Yeah, absolutely.
That's the key.
Absolutely.
Yeah. So that's the key. I want you guys to lead with value anytime you want to get into a situation where you want an experienced investor to help you, because you will get a much better return on your investment, your emotional investment. So awesome. So Kevin, we talked a little bit about your residential experience. You're buying and selling houses. So what kind of led you to go from the residential side into the commercial side? And then we'll spend the rest of the show on the commercial side. What caused you to do that? I mean, did something happen to you, or what was the reasoning? Because a lot of people,
I had some partners, and we had a few apartment complexes come our way, and they seemed like good investment opportunities. I had a good deal of money laying around, money I was making in the single family space, and so it was kind of an easy set it and forget it type of offer that came my way in multiple different times. So I ended up acquiring, like 500 multifamily doors in a period of like 2.5 years while my single family machine was running. Right. But I never really focused on the multifamily because I had this machine that I thought was, no one likes change. And so I was like, this is working over here. Like, I'm like, why are we going to make such a major shift? Yeah. And so that's what happened. Literally focused on the single family still, continued buying, the multifamily stuff. And then 2008 occurred. And ultimately what happened is the single family, my single family portfolio basically imploded down here in Florida. I mean, within 12-month span of time, what was originally like a 66% loan to value across my portfolio was like upside down in value.
Oh my God.
Cash flows, everyone says that, demand for rentals go up when a market crashes. That wasn't the case down here. You had people leaving Florida because there was no jobs, a lot of construction related jobs, they were gone. And so you had a mass exodus, and we had a major occupancy issue as well. In addition to that, there was a lot of spec builders down here building rooftops, like literally by the thousands for, populations that weren't here yet. And ultimately, a lot of those builders started renting brand new homes for not much more than what my 20-year-old homes were renting for.
Yeah,
and so,
competition. Yeah.
Yeah, we had this. It was a really bad situation. So negative cash flow, positive cash flow to negative cash flow, and then positive equity to negative equity on a $30 million portfolio, and it just wasn't sustainable. And so that pretty much imploded. And then we had to sell a lot of our apartment complexes at the bottom of the market. We had 5-year debt and a lot of stuff. It was like local and regional type bank debt. And by that time, when that time came around, my credit was shot. My financial world was a mess. And so we had to sell that stuff at the bottom of the market. And so I basically went into like 2010, 2011 with literally nothing at all. And ultimately looked back and kind of reflected on what worked and what didn't work, and kind of kicked myself in the ass a little bit that I didn't really focus more of my energy on the multifamily stuff, because I literally had acquired almost 4 times the amount of doors than what I had actual single family properties without even putting much effort into it.
Yeah.
And I was working really hard, grinding away, trying to build the single family portfolio. And I'm like, what the hell was I thinking? Right? Like, there's a much more efficient and scalable way to do this. And it's commercial real estate. At that point it was multifamily. And so I just, I went on a journey, and that's kind of when I, found out about mobile home parks. And during that period of time, I bought some other properties as well, just really dabbling in different types of commercial real estate. But ultimately, mobile home parks are the thing that really hit home with me. And then I saw a great opportunity there, something that could be scalable. I didn't want to buy one home at a time now moving forward. I wanted to rebuild something quicker. And mobile home parks seemed to be it. But I didn't know yet. So I went and bought a mobile home park in 2012, a really distressed one. Focused on that one asset. I literally used any of the money I had in savings. It was a pretty rough couple of years after the crash happened. Like, I was, in dire straits, like 450 credit score, and literally, not much money at all. Used a little bit of money I had a partner in that first mobile home park, bought that thing, spent about 7-8 months stabilizing it. Worked really well. I said, okay, well, let's see if we can do this again, right? And we can replicate this. Bought a second one, bought a third one. And, now we're in like 13 different states, and we got a little over 2,000 pads under ownership, and wow. and we love it, man. Just it's a niche that is treated us really well. There's still feel like there's a lot of opportunity there for growth and expansion, and yeah, man, we haven't looked back. So anyway, that was kind of the Cliff Note version of kind of my entry into the space, the crash and then the rebuilding.
Yeah, wow. You have a lot of experience, 20 years. Oh my goodness. Yeah. I mean, you've been through a lot, with the residential and then the crash. And then that's the thing, like you moved. So you used to live in Pennsylvania, and you moved down to Tampa Bay now. Is that where you live?
Yes. Yeah. So I moved down like 2002. So like basically I met David in Pennsylvania, lived up there for about a year and a half, and bought a number of properties up there, and then said, you know what, man, I got to get the heck out of this weather. I've never got used to winter weather, like, gray, dreary skies that exist in the Northeast in the wintertime, and gets dark at 4:30 in the afternoon. It's just not for me, man. It's just, it never was. And so I was either going to move out west to Colorado, Denver. I love the mountains. And then I also love the water. And so I came to Florida first. Fell in love, bought a boat, bought a house, all within like less than a year, and said, this is it, man. This is home base for a while, and I've been here ever since. So
that's a great area. I was in Tampa last year. I live in San Diego, and actually San Diego reminds me of Tampa a lot.
Absolutely.
They're similar cities, except the taxes out in California are insane.
I know.
It's a whole nother topic. So you're down in Southwest Florida. So obviously, you had a lot of experience. So now, I'm really excited. We're going to speak about the mobile home, niche right now. I actually heard you on the Bigger Pockets podcast a while ago, and you were going into detail on this, and it really just piqued my interest. So, what are some reasons on why you like mobile home parks, and why some other people, other investors in this niche, what are some real big benefits on the mobile home parks? Because it's something it's not talked about as much as the apartments and the strip centers. And just, would you mind sharing some reasons?
Yeah. Lots of factors. I'll kind of pick maybe the top 3 or 4.
Top 3 or 4. Yeah.
First and foremost, so I'll kind of lead in with the story of how I was introduced to the space. And it was by a gentleman named Randy. Randy was just a mutual friend, or we had mutual friends, and kind of almost the same way I kind of met David. I met Randy, and I was in this journey of recreating everything I had lost. I needed to figure out a vehicle and how to get there. And a friend of mine introduced me to this guy named Randy. Randy happened to own 3 mobile home parks here in Florida. Had worked for a bank for like 30 years, retired, and he was a lender on mobile home parks for like 25 of those years, and then ultimately retired, started buying parks here in Florida. And I had no interest in mobile home parks when I arranged a lunch with Randy. I just like meeting people, right?
Yes.
I mean, your net worth really is your network, and I'm all about meeting new folks, and you just never know who you're going to be sitting down, across from the table with breaking bread. And Randy was he's a great person. We're still friends today. Anyway, Randy was in the mobile home park space, and I didn't know what we were going to talk about for the time we were together, but ultimately what ended up occurring was him finding out who I was, what I did, what I'm doing today, what my ultimate goals were. My goals were to start buying multifamily. Like, I saw that as a scalable way to get back on top again. And I never considered mobile home parks. Anyway, he basically started shooting down why mobile home parks are so much better than multifamily. And I'm like, damn, he's like beating me up here.
Yeah. But anyway,
yeah. He said, first and foremost, the returns are a lot higher. And that might not be as true today per se. Like, you used to be able to, if you looked at any given marketplace a couple of years back, you could expect a 200 to 300 basis point, yield spread premium on a mobile home park versus the same quality apartment complex. And that's changing, ever so changing today. There's a lot more competition in our space, private equity firms driving cap rates down and such. But even then, the returns are what we buy today. We can get significantly higher returns in our product than we can in the same markets that we're in on a multifamily space. So the returns are typically higher. Another big factor is the management is a lot less intensive. And so typically we're not owning the units. We do own some, but that's not really the business model. The business model is renting the space. Think of it as like renting a parking lot to someone that has a mobile home that really isn't that mobile. And so they basically pay us lot rent on a monthly basis. And so, you're not replacing air conditioning units. You're not dealing with roof leaks, plumbing issues, right? They own the home. They're dealing with that. Our only responsibility, being the owner of that property, is to maintain the infrastructure. So the water and the sewer lines of the park, the roads, the common areas and such. That's our responsibility. That's fairly easy. And so the management intensity is fairly low versus an apartment complex of the same size. You've got maintenance requests. You've got a part-time, full-time maintenance guy that's literally running 40, 50, 60 hours a week every day, fixing water heaters, fixing roof leaks and this, that, and the other. That doesn't necessarily exist in our space so much. Another big one is the turnover is much less. These units, even though they're mobile, they're called mobile homes, like 90% of the mobile homes that come off the assembly line, once they make it into a community, they never leave that community.
Yeah,
not so
mobile.
No, they cost like $5,000 for a single wide and $8 to $10,000 for a double wide to move. Most folks that live in a mobile home park, they typically don't have that type of money to move, and nor does it make like financial sense a lot of times to move an older home. And so what happens is they live in that home, they pay the lot rent. If they ever want to leave, they'll put up the home for sale, just like a normal stick-built home might go up for sale, right? They'll pay the lot rent until a new buyer comes in. The new buyer buys that home, new buyer moves in, they literally transition over, and the new buyer starts paying the lot rent. So you never have that down period that exists in an apartment, right? And so like an apartment, you have someone that leaves, you got the turn time, it can be, 2 weeks to 2 months, depending on how bad the unit is. And then you got a lease up period as well. And so you got downtime that is drastically affecting your revenue, and that doesn't necessarily exist in our space. And so those are some of the big key points. Another one that really struck home with me that Randy had made a mention of is mobile home parks are the only asset class that have a diminishing supply, and that there's more that get torn down or redeveloped into higher and better uses every year than actually get built. Municipality, there are a couple of different reasons for that. Number one, we've got a bad rep in our space. Mobile home parks have a negative stigma, which they shouldn't. Just like apartment complexes, there's really bad ones and then there's really nice ones. Same thing, right? We own some really nice parks. I mean, some really, really high-end parks. But yet in the same towns, there might be run-down trailer parks, right? The ones that people really apply that stereotypical image of, just like drugs, sex, and rock and roll. And that's just not the case. But being that stigma is there, municipalities don't like us, right? And so the chances of you getting approval of building a new mobile home park is next to zero. I mean, I think there was like 12 mobile home parks that were built in like the last 10 years. I mean, I might be butchering it.
Oh my God.
It's a very small number. There was more that were torn down or redeveloped, many more than that. So there's like this shrinking supply of this product that is affordable housing that we all know is the growing demand for affordable housing, right? It's expanding and we're not servicing that need. And then, another factor is municipalities don't want these things built because typically they encompass a lot of ground area, right? It's not like an apartment complex where on 3 acres, you might be able to get, 80 units. To get 80 units in a mobile home park, you got to maybe have like 3 times the amount of land area to do it.
Oh yeah.
So from the tax standpoint, just the value of those homes versus the value of an apartment complex from a tax basis standpoint, the city is going to be in much better shape if they literally have that apartment complex there versus that mobile home park. And then the end user, typically it's in a brand new apartment complex, is probably going to be a much better stimulator for that local economy as far as like spending goes than the folks that might live in a mobile home park. So lots of different factors of why, new parks are not being built. So I like that. It's a very big insulator factor for us. Whenever we buy a community in a great market, I don't have to worry about a developer going down the road and buying 10 acres and developing a new mobile home park. It's just not going to exist. So we're very insulated. All we got to do is, buy in a good market, run a tight ship, and there's virtually no competition.
That's awesome. Yeah, I've heard things like that before, like the way that, it's so I'm guessing a lot of these parks are just they're grandfathered in. So nowadays, if you go to a
That's it.
rezone, so if let's say I own an off like a raw piece of land and I take it to the city zoning and I'm like, hey, I want to turn this into a mobile home park, they're going to say, get
Good
lost,
luck.
kid. Yeah, they're
Yeah.
going to say,
Yeah.
no way. So basically, and that's where you guys have your niche carved out there, because if
Yeah.
you can identify a park and acquire it now, you're getting grandfathered in because, when were a lot of these mobile home parks now developed? Are you buying like, because it's just land essentially. So when were a lot of these developed? Because they're still all over the place. So they're all up by me in New York.
I think they were built as far back as like the 1920s, but most of the stuff, I think like the largest concentration of parks that you see in the country today were built sometime between like the mid 50s and like the early 80s. Like that was like the biggest concentration of when these were built. Okay. I'd say on average, our parks, I think maybe our oldest park probably was just constructed in like the early 60s. And then we've got a park that I think I'm trying to think, it was built in like the late 90s.
Oh, wow.
So that's
okay.
kind of the span of our current inventory of what we own. But yeah, I mean, again, there's a few that come up each and every year, but the only thing that really gets built are very high end, what we like to classify as lifestyle communities. And these aren't affordable housing communities. These are people that live in the Northeast. They want a second home in Florida, and they want 3 swimming pools, palm tree lined streets. And, they want something that's, a bunch of other folks that are 55 plus that they can hang out with on a daily basis when they're down visiting in the wintertime. That's typically what gets built, but that is not affordable housing. Most of the time, these things are more expensive than what a similar condo might be in the same area. You're basically paying for the lifestyle experience versus, looking for an affordable housing option. So.
Awesome. Yeah, that's definitely interesting because it's something that, not everyone, every day is like, oh yeah, I'm buying a mobile home park. I know a couple guys, you and a few others in my network that are into it, but it's very interesting, some of those benefits. So let's go to the opposite side of the coin now. What are some pitfalls to look out for when it comes to, getting into the mobile home park niche? Like I know, and I don't know if this is a myth or not, but I heard, at least one thing, and I want you to let me know if I'm right or wrong, is the financing sometimes can be a little challenging with mobile home parks. I've heard that before. I don't know if it's true or not.
It can be. I would tell you that it's getting better. It's better now than what it was 7 years ago when we got into the space. And I'll kind of put it this way. A lot of these mobile home parks are still owned by mom and pops. Very common that they keep horrible books and horrible records. They might be collecting cash, just to, avoid having to pay taxes. They don't like Uncle Sam too much. No one does, but they go a very roundabout way to avoid paying taxes. They keep handwritten ledgers, things like that. So God. Many different times we've received like financials literally on like, green sheets, that our grandparents used, 40 years ago, no joke. And they still operate them that way. So that makes it a little bit more challenging getting financing when you got books that were kept that way. A lot of time these communities, might have deferred maintenance, that create challenges, but a lot of it really stem from, I think the challenges associated with getting financing really stem from the lack of understanding of this niche. I mean, it's a smaller niche. I mean, there's only approximately 50,000 parks in the U.S., give or take. That's a very small number in comparison to apartment complexes and shopping centers and self-storage facilities. And so, there's not many banks out there, or there weren't many banks 7 years ago that really fully understood how to underwrite the niche. And so it could go from, you could take one property, go to one bank, and they literally say, hell no, we're not doing this thing. And most of the reason it's because they don't understand it. And you go to the next bank, and they're like, oh, that looks like this thing underwrites just well. We understand this niche. And they'll give you like primo debt on it, right? But that process of finding the right bank used to be very challenging, a lot more challenging than it is today. And so we haven't had an issue getting financing for the last couple of years. About the only time that becomes very challenging, anything under like $1 million loan amount. You basically, you have to rely on local and regional banks to do that type of debt, or a credit union. And they're typically the ones that are much more conservative. They also, it's very hard to find the ones that truly understand the niche. And so we've had more smaller deals die than larger deals. And it sounds very, very counterintuitive, but I mean, it's just the case. So small deals can be very challenging to get owner financing. Now, on the flip side of that, there's a positive here. There's really a silver lining in that. A lot of these parks are owned by mom and pops that have owned them for 30, 40 years. They own them free and clear. They've fully depreciated the asset. So they've got a very large recapture and capital gains hit that will come their way if they sell it. And a lot of them have grown accustomed to the revenue that the park produces. It's part of their retirement most of the time. And so getting owner financing, I wouldn't say that it happens all the time, but there's a good chance of actually getting an owner on board with selling it, eliminating the responsibility on his part, and still collecting income stream, mitigating his capital gains by doing that. And he owns it free and clear. So there's no there's no underlying debt that has to be to be dealt with. So we've bought many communities that were not financeable for many different reasons. We just got the owner to carry until we can get the thing stabilized, get some clean books in place, and be able to refinance and take them out at some point in the future. So, the challenge also creates the opportunity.
Yeah, absolutely. Yeah. And that's what I was imagining. I'm thinking, like, I've heard people say, oh, it's a little different when it comes to the financing. And I'm like, well, that being the case, maybe the owner financing could make more sense. And it's not like you said earlier, it's not like these owners are probably a lot of times wrapping an original note that they have. You said they most likely own it free and clear if they've owned it for 4 years. So it's like, why throw away a nice income stream every month?
That's it.
With that. So let's spend a little bit more time on some of the drawbacks. So, something that really appealed to me, you said earlier, was, it's almost like you're owning multifamily without having to deal with the structure of the entire, building. Mm-hmm. So when it comes to like the roads, the maintenance, I mean, are there any issues when it comes to like dealing with the water supply and the gas supply? Like, how does that all kind of work out? And can that be a pain in the butt from time to time?
It can be. And I think that's where your due diligence on the front side, right? Yeah. Pre-acquisition due diligence comes into play. And that's where I'd say probably most people make the biggest mistakes is they get cheap during a period of time when due diligence costs money, and you might spend that money and ultimately not buy a property, which that sucks, right? It's a sunken cost.
Yeah.
But it's not an area where you get cheap. You want to know, what condition the water lines are in. You want to know what condition the sewer lines are in. You want to know what kind of, not just today, but what future capital improvements you might need to make. I mean, water and sewer lines don't last forever. Typically the material that they built sewer lines from 60 years ago is clay tile. That stuff crumbles over time. Water lines, back when, the schedule of PVC that was used is not as robust as it is today. And so PVC also gets brittle when it's in the ground, depending on what kind of minerals and such are in the soil. And over time, PVC gets really thin and it's prone to breaks and leaks. And, leaks in water cost the park a lot of money, right? Like there's a significant expense associated with water that goes into the ground and doesn't go into the actual homes of these residents. And so things like that you have to understand getting in can be big pitfalls. But again, it's very easy to uncover on the front side and to identify those challenges before you dive into a park and buy it. So, but again, that's probably the biggest mistakes I see folks make is not understanding the infrastructure that's there. More importantly, when there's private utilities involved. So municipal water and sewer, fairly easy to understand.
Yeah.
Private water and sewer, completely different animal. Shouldn't scare you away, but like extra level of caution, extra level of professional vendors involved here to make sure that you're crossing all your T's and dotting all your I's. So well systems and septics and wastewater treatment plants and things like that. I mean, you can get in situations where you've got hundreds of thousands of dollars of unexpected expenses if you don't do your homework on the front side.
Yeah, absolutely. And this isn't uncommon for anyone listening who's in the single family space, which is, I'm sure, is a good amount of listeners here. That's why I wanted to bring Kevin on. It's like, we, in the Northeast where I buy a lot of my properties, I mean, you weren't running the properties and there's wells, there's septics, and that's a whole nother animal when it comes to getting a property in contract. Now you got to get a well test. Sometimes there's buried tanks. We got to get that drilled out. I will not close on a property with a buried tank. So it's the same stuff. It just seems like it's a little bit bigger of a scale when you're buying, 75, 80 plus pads. So it's just, same thing, bigger numbers. So Awesome, Kevin. That's been very, very informative on the mobile home park, section. So I want to kind of fast forward now to the real end of the show now. And I want to talk about, some success habits. The real estate stuff is great. I love talking about that with all the guests, but really I'm into personal development because I believe, with the personal development comes first, the real estate will just be a byproduct of that personal development. So I'm sure you're the same way. I see the books behind you. So so what are some of your, I guess, success habits that you do on a daily or a weekly basis that just keeps you on track? Because, like I know this is not an easy business. It's a great business, but there's always challenges. And I'm a big believer in, you don't control your future, you control your habits, and your habits control your future. So what are some habits that you do on a weekly basis?
I think a couple of big things is, gratitude. And I wouldn't say that I'm not going to lie and say that I'm structured to where every morning I wake up and, for the first 5 minutes of the day, like I talk, give the top 5 things I'm grateful for, but I can tell you throughout any given day, in the evenings, in the mornings, whatever it might be, just keeping a positive attitude and not always finding like the problems, but seeing like the positive side of any challenge that you might be facing. I mean, just being grateful for like being here on earth, being grateful for being on this call with you right now, Greg, right? That we had the opportunity to meet one another, being grateful that I've got a roof over my head right now and I've got air conditioning on and it's 85 degrees outside, just little stuff like that people just don't think of. And I think that trying to see the positive or the glass half full side of every potential challenge coming your way on a daily basis, because we all face a lot of them. I think that's important. And that's something that I've tried to practice for many, many years now. Another thing is health and fitness. And again, I'm not going to act as though like I wake up every morning at 4 a.m. and go for a run or go for a bike ride or go to the gym. That's just not the case. But I do try to break a sweat every day. And actually, my sweat today was literally next door. We've got a restaurant I was having a lunch meeting at, and I literally did a sprint from there to get on this call with you. And so I broke a sweat. I was huffing and puffing when I ran up the stairs of my office here. But
it means a lot.
In any event, I do have a little more structure than that. I mean, I'm an avid cyclist. It's something I really enjoy doing. I ride a lot of miles every week, and it's my way to go. I listen to podcasts. I kind of get my own meditation in. And the days when I actually wake up at 4 a.m. and go for like a 40, 50 mile bike ride are the most productive days by far of my entire week. And it feels good. It gets me started on the right foot of the day. And so, that followed by eating well, right? I mean, like truly having a clean diet. And again, I'm not going to act like I don't cheat because, Easter just happened. And my kid, I was definitely grabbing into my son's Easter basket and like stealing some of those peanut butter cups. Yeah. So, but just being conscious of it though, being conscious like truly what you're putting in your body and understanding what's good and what's bad. I feel like that's very important as well. And then, just continual learning. I mean, just like we're doing now, we're doing a podcast. I've been listening to podcasts, for like 12 years before people even knew what a podcast was. And I go to events often. Next week, I'm flying out to Phoenix for a mastermind I'm a part of. The following week after that, I'm going to an industry event. It's like our big industry event in the mobile home park space, just continually learning and trying to stay on the cutting edge of, whatever business you're in. For us, it's mobile home parks and real estate investing, right? But staying on the cutting edge, making sure that we're always, hopefully, one step ahead of our competition. So those are some things that come to mind. Again, I like to say that I'm more structured, but I mean, just like all of us, like we all kind of have our little bit more challenging days than others. But I think the positive outlook and the being grateful for just where you're at in that present moment takes care of most of the other things. It really does. So.
Absolutely. Yeah. I like that a lot. And like you said, it's everything within reason. Like you can't be perfect 7 days in a row, but for the majority of the time, if you just keep your habits dialed, then they'll help you out a lot. So before we wrap it up with some stuff you have going on, is there any books that you've read over the years that have really been impactful to your life and your business? If you wouldn't mind naming a few.
Yeah. There's one really big one. It's a small book, but it had a huge impact. And I think it's just I think it's just called The Go-Giver. Are you familiar with that book? Is it just? I think it's just The Go-Giver, right?
Go-Giver. It's the red book. Yeah.
That's it. That's it.
Things on it. Yeah.
Probably by far, and we've bought multiple copies. Make everyone in our company, all of our staff people, make them read it. I give it out to gifts for like family members and friends. And I mean, like, I'm talking about like a small package that's probably had the biggest impact of any book I've read over the last couple of years. Let me think some other. I have to almost like look at the bookshelf, and more so. So I buy books. I'm kind of funny with this. I get audiobooks on Audible. Yeah. And I buy the physical version so that I got like a reference manual. Like typically I don't read the books all the way, but you'll go through any of the books and you've got notes and tear sections out and like make highlights.
Highlighter, dog ears. Yeah.
I still like the physical book. I have a hard time like making notes and actually, fully comprehending everything from a podcast that I'm listening to. But, another big one that's right behind me is Traction. So we implemented EOS. I don't know if you're familiar with it or not.
Gino, EOS.
Implemented EOS into our business a little over a year ago, and it's been an absolute game changer. I mean, literally has helped us take our business really to the next level. And I think it's going to be the vehicle that takes our business like 10 levels above that. We were looking for something. We were yearning for, an operational system in house that could keep all of our individual departments on track each and every week and making sure that we're running as efficiently as possible. And EOS was that for us. I mean, I know there's other forms out there. There's other different systems out there, but EOS has been an absolute game changer. So Traction's the book that's associated with that. I suggest it's kind of like the E-Myth, right? E-Myth it should be a must read for any entrepreneur. Traction is the same way, whether you implement the exact system or not, but it was an absolute game changer for our business.
Absolutely. And did you bring on an EOS implementer after you read the book?
We did for the first year. So we actually just did our first quarterly without an implementer. So for the first year we did, and got a lot of value out of it. And it just got to the point where we felt like we could, we could achieve the same in-house because we had the system down. I mean, we literally did 4 quarterlies at the end of the year, meeting with that implementer. And so now we're chugging forward without an implementer, and it's going quite well. But I do suggest that if you're going to dive in, I don't think it would have been hard for us to fully implement the system and see all the benefits associated with it if we'd have tried to roll it out ourselves internally.
Absolutely. Yeah.
It was overwhelming even with the implementer in place, right?
A lot of information in that book, Traction. There's like, holy cow, the scorecard and this and that. It's a lot. The seats. It's good. It's good stuff, though. Great book, Traction. If you guys haven't heard of it, Traction by Gino Wickman, and then The Go-Giver by Bob Berg. So, Kevin, we're going to wrap the show up now. So would you mind just kind of sharing a little bit about, the way I got connected with you is from your podcast. So talk a little bit about your podcast, and then what you have going on with Sunrise Capital Investors, because you got some great things going on in the mobile home park space with your company.
Absolutely. I appreciate that. So I've got 2 weekly podcasts. One's called Real Estate Investing for Cashflow. That one I started about 5.5 years ago, and that is a commercial real estate investing podcast. I try to run the gamut of all the different commercial niches or asset types. We've had guys on the show that, self-storage, assisted living, industrial, mobile home parks, marinas, car washes. I mean, the list goes on and on. Basically, we like to bring guys on the show that have a specialty in one particular niche and are absolutely killing it in that space. And so been doing that show for, again, over 5 years now. It's been a lot of fun. And so if you have an interest in commercial real estate and you kind of want to see what the different options are out there, the different flavors that are available, it's like the Baskin Robbins of like commercial real estate podcasts, because I try to touch on everything. Give everyone exposure to things they might not even ever thought of investing in. So that's the one. I have a mobile home park investing podcast as well. I started that it's going on 3 years now. And as the title would tell you, it's about mobile home park investing. So that's all we discuss. I bring a lot of owners and operators in the show, vendors that service our industry, and have had a lot of shows where we've just done myself with my partner, going into very granular detail in the mobile home park investing space. So if anyone that's listening has even the littlest interest of getting into this niche, just go. There's like 107, 108 podcasts, and tons of hours of free information, very granular about our business, our internal workings, and so it gives you a good sense of if this is a good fit for you as far as the niche is concerned. Before you go spend money and go try to buy a park or anything like that, just go educate yourself there. It's a good source. And as far as our company is called Sunrise Capital Investors. We're in the mobile home park space. We have a Reg D 506C offering where we bring in limited partners and partner in deals together. So we're on our second fund right now, about to close that one up, and we're rolling out a third fund here at the latter half of this year of 2019. And things are going well. So any accredited investors that are out there, if they have an interest in this niche but don't want to do it actively, you can go check out our website, sunrisecapitalinvestors.com, and we've got all of our information there regarding the investment opportunity. We got a secure investor portal and things like that. And you can learn just by going there about what it is we do and who we are and what we're all about. So
Absolutely. Thank you so much for sharing that. So if you guys are interested, sunrisecapitalinvestors.com. And Kevin, would you say that's the best way to get in touch with you in general? Just go to the website and go from there?
Yep, either sunrisecapitalinvestors.com, and my personal website is kevinbupp.com. So either one of those. But if you're interested in like the investment opportunity, it's definitely sunrisecapitalinvestors.com. If you want to reach me personally, my website's the best way.
Absolutely. And we'll have both of those websites in the show notes. So Kevin, thank you so much for your valuable time today. I learned a lot. It's been fun connecting with you a couple times, and I hope you have a great rest of the day.
Yeah, well, thanks for having me, Greg. And thanks for all the value that you add, all the listeners out there. Keep doing what you're doing, my friend. You're doing an awesome job.
Appreciate it, man. We'll talk to you soon. Bye-bye.